Hello, this is Owen Larson, and welcome to Mission Winners Market Edge, ahead of the trade. Each week we break down the market's key trends, sector shifts, and institutional stocks that matter most, so you're ready to tackle the trading week ahead with confidence. In today's episode, we're kicking things off with Pat's ETF analysis. This week, he highlights key sector rotation into financials, healthcare, and consumer staples, while tech continues to show relative weakness. The NASDAQ 100 has been under pressure, breaking key support before rebounding late in the week, and the S&P 500 is trying to stabilize. But is this bounce real buying, or just short covering? That's the big question. Let's dive right in. Here's Pat with this week's ETF overview.
Money goes to the leading groups. Money goes to the leading stocks in those groups. It's almost like the chicken and the egg. Which came first, the leading stock or the leading group? You combine both together and you can really make better investing decisions, make more money. So let's take it from the top. Here we go. The spiders on the weekly and the daily. And you can see it was falling on fairly heavy volume, had a good day today on a pickup in volume. That's a plus. Here's the negative. It's still below the falling 50-day moving average line, which is the green line. I'd like to see a little bit more power in that, but it is an improvement. It's a start. Also, very important, higher low. This low is higher than this low. You can see it on the weekly chart too. Something to watch. And I do like the volume pickup here. So shows maybe some improvement in the S&P 500. Let's move on. QQQ. Now this is a great lesson. Watch this. This low is higher than this low on the S&P 500. On the Qs, this low is lower than this low. It's been underperforming the NASDAQ 100. We'd like to see power in this, okay? That will really help us. So again, the NASDAQ 100 big tech stocks are lagging a little bit. I'm not being bearish. I'm just pointing out reality. That's all it is. So it's underperforming a bit, but maybe it'll start to pick up this week. We'll watch and see. Let's continue onwards with our journey. Here we go. ARK Innovation. This is lagging. This is still lagging. Okay. Big name growth stocks lagging. Got to be cautious there. Okay. Same thing's true with next generation internet. You can see it on the weekly and you can see it on the daily. Please note this. I'm not being negative. I'm just looking at what is. Say the big tech stocks are underperforming here a little bit. Could that change next week? Well, sure it can. Am I saying it's going to? No, but at least we're always prepared. We're always prepared. That's why we do these videos. Biotechnology, kind of hanging in here. Doesn't look too bad. Higher low setup, but it is a little sloppy here. A little sloppy on the weekly too. Not in a great leadership position for biotechnology. Energy, it's just basing. It needs to go across this top right here. That's what we'd be looking for energy. Okay. By the way, you can always look up here and you can see the name Direxion Daily Energy. There you go. Just for what it's worth to help you. Dow Jones Internet, this is lagging. Look at this. It's underperforming. That's a concern. Be careful, again, in the internet realm. IBD 50, underperforming here on the daily and on the weekly. 1+, it has a higher low setup. But this is a great proxy for good growth stocks. And at this point in time, it's underperforming a little bit. What does that tell us? Don't get reckless with your buying. There you go. Gold miners, kind of hanging in, not too bad. There's not a real clean entry on it, though, but it's underperforming a lot of the other indices, okay? So gold miners, there we go. GLD, we bought this. You see back here, we bought this. That was a great run. Sold some into strength. We're in great shape, okay? But note the simple base right here on the weekly. Look at it on the daily, and that is a nice move, folks. In a crummy market, it was a good move. So we'll watch and see what happens. There's no safe entry on it right now, though. Okay, cybersecurity. There's no safe interest on that. Interest on that at this point in time. Be a little cautious with cybersecurity. Biotechnology, a little sloppy here. Not a clean entry. Online retail's lagging. Okay, as you can see, this needs to start showing some power. Expanded software technology has a lower low. You can see it on the weekly. What's it say? Again, with software technology, be a little cautious. There we go. Medicine's just basing here. It needs to start to push above these tops here before we get really intrigued with it. Just basing right now, and that's okay. Mid-cap, kind of underperforming. Look, you can see on the weekly, That's why I love this template. It has a lower low. This low is lower than this low on the weekly. Mid cap, iShares mid cap, lagging. Okay, mid cap stocks, lagging. Aerospace and defense picking up, but not a really clean spot on it at this point in time. U.S. home construction is really lagging. Look at that. You got a lower low on the weekly. Home construction, be cautious. Isn't that good to know? How many of you knew that? Now you do. There's power in what we do here at Mission Winners. Organization. S&P 500 growth. I mean, it's got a lower low here on the daily. It has a lower low on the weekly. Had a nice lift today, but note the volume was less than the down volume. I can't stress, I'm not being bearish. I'm just pointing out it's relatively narrow at this point in time. Could it improve? Yes, but remember this, and this is a big foundation of Mission Winners. Focus on strength. Leading stocks, leading groups, stocks near 52-week highs. It will dramatically improve your investing results and making money. That's a fact. Small caps kind of lagging there too. I mean, look at the weekly. Just be a little cautious. There we go. Continue onwards. Here we are with Dow Jones, U.S. real estate. Now, this one's picking up a little bit. Maybe look into that. U.S. real estate. You could punch up IYR, find out what their top 10 holdings are. Maybe there's an opportunity there. There we go. Transportation, that's pretty sloppy. Look at the tail bars on the weekly. Just not a lot of clean entry there. Be cautious with that. Airlines are grounded. Leave it alone. I had to say it. It's dad humor. It's just a bad thing with me. My kids would laugh or shake their heads. Really nothing to do with airlines, okay? Regional banks just basing. Hold on a second. Hold on. Apologies. I have a policy. I don't pick up the telephone when I'm doing videos out of respect for you, and out of respect for the person calling. So banking, still kind of choppy here. Be a little cautious with that, okay? Continue onwards. Insurance picking up here a little bit. Look at the base here on the weekly. Look at the simple base on the daily. Isn't that neat? It's a little bit extended, okay? But earlier this week, you could have looked and said, maybe there's an opportunity in insurance stocks. You could punch up KIE, find out their top 10 holdings, see if there's something in there. That's systemization. That's what we do, and it works. Continue onwards. Regional banking's lagging. You can see it's below the falling 50-day. A little sloppy there. Be cautious with regional banks. Mid-cap still lagging here. Not a lot of power. Be careful with mid-cap stocks. Oil services lagging, okay? Be careful with oil services. Oh, pharmaceuticals, look at that. That's actually pretty good. Isn't that nice? Gosh, I wonder if there's any big pharmaceutical stocks that, gosh, did we get involved with any? Yes, we did. Eli Lilly, LLY. There we go. So NASDAQ 100 still lagging. You got to be a little cautious with that. Same thing's true with the leveraged one. Needs to see some power. Retailers, not a lot of power there. Cloud computing's lagging. Be cautious. Silver, close, up near the highs for the day, but still the trend is down. Be careful with silver. Steel is lagging. Be careful. I'm going to pause here. Please don't think like, boy, Pat's negative and bearish. Not at all. I'm just reporting what is. That's all. It's like, oh, it's raining outside. Oh, you're negative. No, I'm just saying it's raining. Or, oh, it's sunny. Oh, you're always positive. No, it's just sunny. We're just reporting what is. We approach the markets with an open mind, and that really helps us. We let price and volume guide us, and it works. Helps us capitalize on things. Semiconductors lagging. SSO has a higher low setup on the daily and the weekly. Slight pickup here. Hopefully this will continue. All right. Solar, look at that. Down today when the market was up. Be careful with solar. Small caps underperforming. Careful with small caps. Oil, not a lot of power there. Aerospace and defense, not a lot of power there. Biotechnologies lagging. Be cautious. Home builders, way down here in the doldrums. You can see it on the daily. You can see it on the weekly. Be careful with home builders. Materials, just basing here, but there's not a lot of power with it at this time. You can see the red volume bars. Communications picking up a little bit. Nice bounce off the 50-day with a pickup in volume. Now that's something to look into. Doesn't look too bad on the weekly either. XLC. I do like that it fell on lower volume and then it spiked up today on a pickup in volume. Maybe looking at some communication stocks. Energy's just basing here. It needs to show some power. Financials. Oh, look at that. Isn't that nice? I'll draw a line for you. That should catch your eye. You might want to look into XLF and see what are the top 10 holdings in XLF. You may find something there. There you go. By the way, look at the weekly. Look at how it closed near the weekly highs on a pickup in volume. There you go. XLF. That's why we do this. I guarantee it, 99% of the people out there, they didn't know this. But we did and we do. Industrials lag and be a little cautious toward. Technology lifted today, but man, this doesn't look so good, does it? Again, it's telling us something. We had a good lift here, but the rally is not real broad. That tells us to be kind of cautious. Consumer staples, picking up here a little bit. Isn't this intriguing? Consumer staples, not discretionary, staples, things you have to have as a consumer. Toothpaste, toilet paper, you got to have that stuff. More defensive related, isn't it? It's picking up a little bit. You could dig deeper and see if there's anything there. Utilities just basing, not a lot of power at this point in time. Got to be cautious with that. Healthcare, another area like consumer staples. You got to have healthcare, folks. And this is hanging in. Look, up on heavy volume, basis, up on a pickup in volume. Healthcare, defensive related. Consumer discretionary, yeah, there you go. There's the other side of that coin. Discretionary spending, they ain't buying. Okay, says be same way. Metals and mining, not a lot of power. Be cautious there. Oil and gas, really lagging. Be careful. Retailing, look at this. Related to the consumer. The retail stocks are lagging. There's a powerful statement I just shared. What does that say? Stay away from retailing stocks. And what does that do? It narrows our focus on better places to put your money. That's why we do this. Software, hit new lows for the move right here. Look at the weekly. Be a little careful with software.
Now that we've seen the big picture market trends, let's zoom in on the setups and sector rotations shaping the week ahead. One of the biggest takeaways from Pat's analysis: financials are standing strong, up more than 2% last week, while tech stocks are struggling to keep pace. That's telling us where the institutional money is flowing. But how do we take that information and turn it into a solid plan? Let's break it down and get into the key areas of focus heading into next week. The market is at a pivotal moment heading into next week. After a sharp sell-off, we saw a late week bounce, but now the real question is, was that a true reversal or just short covering? Right now, the market is at a crossroads, and how it reacts in the coming sessions will tell us a lot about what's next. Let's break it down. The NASDAQ 100 has been under pressure, taking the brunt of the decline, while the S&P 500 has held up slightly better. But the real story isn't just in the indexes, it's in the sectors. Technology stocks have been the weak link, while financials, healthcare, and consumer staples have been gaining strength. Financials finished last week up over 2%. Healthcare and staples both gained more than 1.5%, and that tells us exactly where money is flowing. This is a rotation, not an all-out market collapse. Big money isn't fleeing the market, it's repositioning. And that's the key, knowing where the money is going. When you see this kind of sector rotation into more stable areas, it means the market isn't in panic mode, it's adjusting. That's critical to recognize because it shapes how we trade. Instead of chasing beaten down tech names, we focus on where leadership is forming. The next step, watching for a higher low. If this bounce is real, we need to see stocks build constructive bases instead of just rebounding off oversold conditions. The late week rally showed signs of short covering rather than aggressive institutional buying, so now we're watching for confirmation. If the market pulls back and holds above Friday's lows, that's our signal that real buyers are stepping in. If it undercuts those levels, it tells us there's more downside risk ahead. From an individual stock perspective, we need to see leadership emerge. There have been strong reversals in key names, but they need to hold their ground. Financials are already proving themselves, while tech names like Meta, Tesla, and NVDA are showing signs of stabilizing, but they still have work to do. The best trades will come from stocks that establish higher lows and clean entries with strong volume. The smart approach here, patience and precision. Even if last week was the low of this correction, there's no rush. The best setups take time to develop, and we don't need to force trades. We trade strength, not hope. That means focusing on the sectors and stocks that are proving themselves, not trying to catch a falling knife in weak areas. The takeaway? The market is shifting, but not breaking. Financials, healthcare, and staples are leading, while tech still needs to prove itself. We're watching for a higher low and proper setups before stepping in aggressively. When we get that confirmation, we'll be ready. We hope that breakdown gave you some key insights into where the market is shifting and what to watch for in the coming sessions. Recognizing these patterns is what separates disciplined traders from those chasing noise. Now, let's shift our attention to the max list, the powerhouse stocks that institutions follow. One standout this week, Visa. It's showing strength with a breakout from a solid base and a pickup in volume, outperforming its peer, MasterCard. Meanwhile, Amazon and Netflix are forming setups, but they still need confirmation before they become actionable. Let's get right into it.
So now let's move on and look at the stocks. So here's Apple. Apple was languishing here. I'm going to do a good lesson for everybody. We bought Apple right here, folks. It ran up, reversed, and started fall. And we sold it for a very small loss. Folks, there's two big capitals in the market, financial capital and mental capital. By controlling risk, we control both. It's big, folks. All right? You keep losses small and protect what's going on between your ears. All right? You don't want to get bogged down. Now, it put in a nice reversal bar on Friday. We'll see if it can continue. So we're going to watch Apple, okay? Perhaps, here's what I'd like. So that's the 50-day moving average line. It pulls back and then takes out Friday's highs with really good volume. That would be a bounce off the 50-day moving average line. It would be an aggressive entry. It's not clean and simple, but it might be an opportunity. So there we go. Let's continue onward. Amazon, that's a little choppy here, okay? A lot of overhead. It does have a higher low right here. This low is higher than this low. Would be an aggressive entry taking out the tops of this bar, okay? On Amazon, something to watch. But it is aggressive, folks. I can't stress this enough. This is not clean and simple stuff. That was a clean and simple base, and we made a ton of money on it. This isn't. So let's move on. Amazon, the lower priced one, same thing. Alibaba, we own Alibaba. There's the base, folks. Right there, simple base and trending. A lot of people, I'll share this, a lot of people overanalyze things. You don't need to. We know what to look for fundamentally. We know what to look for technically. We combine both together to make good investing decisions and make money. That's, folks, in a crummy market, that's a rocket ship move. That's almost a 40% move right there. In a pretty sloppy market, that's great. Now, it's got support right here on the ADMA. That could be a potential buy taking this out, okay? Taking out the highs of this bar. So something to watch, but it is not a clean and simple base breakout. It's a pullback setup. It's riskier. If you buy, you go smaller. There you go. BIDU, there's no power there. Stay away from it. Go back to that just to show you. There's nothing great there. Okay. Goldman Sachs, potential bouncing off the 50-day. What catches your eye? A, it's on the 50-day. Institutions use the 50-day for buying or selling. Potential bounce here and a volume pickup on Goldman Sachs. There you go. Continue onwards. Max list. MasterCard. Look at MasterCard picking up here on a pickup in volume. All right. Something to watch. Remember that. MasterCard. What's the sister stock to MasterCard? Visa. We'll see how that looks in a minute. Meta was a great run here. Simple base again, folks. That's a monster run. All right. Locked in profits, in good shape. I think we're out. Bouncing here off the 50-day. A little sloppy, though. Wiggling back and forth. There's a lot of turbulence in the markets, folks. So do be careful. Just be cautious. Be a little cautious here. Microsoft, there's nothing there. Look at the difference here. Meta, support on the 50-day. Microsoft below everything. Don't overthink it. Just leave it alone. It's that simple. Netflix. I like how Netflix is basing here a little bit above the 50-day. That's something we might want to watch going forward. And I do like, as I said, it's above a rising 50-day, and it closed up on a pickup in volume on Friday. There we go. Continue onwards. NVDA? No. They had earnings a little too sloppy right now. Leave it alone. We made a lot of money on this stock before, but it ain't there now. Move on. Same thing's true with the derivative of it. Tesla. I love Tesla, excuse me. I did wind sprints up a big hill yesterday. Woo! Whipped it around. Tesla. It's below everything. It's below all the moving averages. Leave it alone for right now. It'll eventually turn and we'll be ready, but until that happens, we wait. Same thing's true with the derivative of it. And then we've got Visa picking up. Now look at this base right here on Visa. Isn't that nice? Look at the volume came into it. Started coming in the day before and then followed through. Yeah, we own it. And you see why. It was stronger than MasterCard was. And that's why we own Visa. And we've added to it. We may add more.
That wraps up this week's episode of Mission Winners Market Edge, Ahead of the Trade. We'd like to thank Pat Walker for his insights, and we hope you found this valuable. If you enjoyed this, be sure to like, subscribe, and turn on notifications so you never miss an update. Thanks for tuning in, and we'll see you next time.